Good afternoon to everybody. Good afternoon. Good afternoon to shall I start?
Yes, please.
Good afternoon to everybody who is watching this webinar, the 60th webinar of the CPE committee, 360 degree. What a fabulous webinar today number is. It's 60. Only 3 is pending. So complete 4. We have required only 3 and we need the support with the maximum number of participants to reach at this level. So good evening, good afternoon to everybody on the behalf of CPE committee of ICI. I, CA Mohit Jain, the moderator of this webinar, welcomes you on this grand evening with our eminent faculty of this day, CA Pankaj Shahji. CA Pankaj Shahji is a fellow chartered accountant and Central Council member of ICI with 2 decades of the professional experience in direct tax litigation, business restructuring, estate and succession planning and valuation. A qualified FCA, CS, LLB honors, insolvency professional, and a registered valuer. He has successfully completed the advanced flagship course on empowering trusted advisor, focusing on unlocking the potential of family enterprises, further deepening his ability to guide legacy driven business families. He has delivered over more than 1,000 technical sessions and authored several articles in the reputed journals. So, our eminent faculty, our Central Council member, CA Pankaj Shahji is with us, and we are going to welcome our eminent faculty on the behalf of our chairman, CA Satish Kumar Gupta ji, vice chairman, CA Vishnu Kumar Agarwal ji, and the whole fraternity of the CA community. Sir, you are most welcome to giving us your valuable time for this webinar. So now our today's 60th webinar is on the topic 360 degree of on partnership. This 60th webinar on 360 degree on partnership and the Digital Personal Data Protection Act and role of CA. Now, as we are all going to see that how a technology is going to evolving an emerging field for us in our practice or in our job as well. So for this, our ICI is a partner in nation building and always support the CA fraternity member to upgrade their knowledge and the skill with technologically and digitally. Our Honorable President CA Charanjot Singh Nandaji, our Vice President CA Prasanna Kumar D, and a whole Central Council member with CA fraternity is working on how ICI can emerge with the evolving technologies which is upgrading nowadays. On this on this topic, today we have a webinar and our eminent faculty CA Pankaj Shahji is with us. And I would like to also share to our all I would like to also share to our all audience that we are our ICI is hosting WOFA 2.0 at Greater Noida from 30th January to 1st of February. I request to everyone, if you have not registered, go and register now and participate in this mega event for building the network and getting the knowledge on this WOFA. So now let's start our webinar with our Pankaj Shah sir. Sir, I request on behalf of my committee and on behalf of the fraternity, you are requested to please take over the dais and let's start the topic on 360 degree on partnership. I request to all the watchers to please, you mention your question. If you have any question, you can also put your question on the chat box and we will take up the question at the last of the session. Sir, Pankaj Shah, over to you. Thank you, sir.
Thank you, Mohit. At the outset, I am very much thankful to the CP committee of our institute for giving me this opportunity to interact with the members on this important 31st October, which is a very important date for all of our members today. In fact, the date has been extended so we can discuss and members can understand this concept in detail. 360 degree on partnership. Why did I choose this topic? It is very interesting to know that partnership is one of the most common structure wherein every small business is working. Therefore, partnership needs revisiting, more research. And what I feel after listening to this presentation today, I am confident that I believe maximum of us are going to change the partnership deeds in our office. I shall be starting my presentation uh, to all. This presentation will discuss all the topics in 360 degree manner. I hope the presentation is visible to you all. See, the topic as it reads 360-degree on partnership. We'll be covering certain legal issues. We'll be covering certain important drafting principles. What happens when you restructure partnership and taxation issues. So these all will be covered today in my presentation on partnership. What is partnership? See, one needs to understand what is the origin of all the commercial laws in India. So we go back to Indian Contract Act. Earlier, the provisions of partnership, sale of goods act, everything was part of the Indian Contract Act. However, as the economy, commercial transactions got regulated and increased, what was being done in 1932, provisions from Contract Act were withdrawn and a separate statute, Indian Partnership Act 1932, was made. So ultimately, for every partnership, the basic ingredient, it should be a contract. So a partnership is a contract, and this is very important term. Why we are going to discuss in future. Partnership is a contract. It has been defined in Section 4 of Indian Partnership as follows. It is a relationship between two persons, two or more persons, who have agreed to share profit. See, this is very important term. They have agreed to share profit, because what happens if you don't share profit? Ultimately, the purpose, whole objective has gone. So we have seen some partnership firms where what happens, there is no sharing of profit. They just make you a partner and give you salary. That is not a correct partnership. So sharing of partnership profits is a very important and basic ingredient which has to be followed. Then there should be a business. This business is very wide. What do you mean by business? Business means any commercial activity. Here we cannot restrict it to the profit and gains of business and profession from under Income Tax Act. Business means any kind of commercial activity should be there in the partnership form. Now, who will do? So, relationship between persons who have agreed. So there has to be agreement to share profit. So profit sharing ratio is must. Profits of business. So any commercial or any kind of activity should be there. Carried on by whom? So all or any of them acting for all. So any person can work on behalf of all the partners of a firm. So these are some basic ingredients based on which whole definition evolves. So firstly, first line says it is relationship between persons. We'll now discuss in future what are the implications. But my first issue or question is, how many partners can a partnership firm have? Minimum two, we all know. What is the maximum number of partners in a partnership? It is nowhere provided in Partnership Act. Earlier, Companies Act 1956 provided for the limit of 20 persons. Now, after Companies Act 2013, there are rules under Companies Miscellaneous Rules 2014, and rule number 10 says there can be maximum 50 partners. So now the maximum number of partners is 50, with a rider that if the partnership is regulated under a specific statute like CA Act or CS Act or any kind of act which is a specific act, then there is no limit. So a normal partnership not regulated under any specific acts, 50 is the maximum limit. But if your partnership is governed, or if the partnership is registered with ICAI, being a CA firm or CS firm or any such firm, then there is no limit of number of partners in a partnership firm. So this was maximum number of partners, which is now 50, and no limit in a specific act. Some legal issues in partnership. As I said, there has to be a business, and business here has been clarified that even if you give some property on rent, you have to have some kind of commercial activity. Every trade, occupation, profession is a business. So it is a very wide term. So there has to be a business. Then issues in capacity. Who can become a partner? So see here the definition specifically says it is a relationship between persons. And who is a person? So person has to be seen as per Indian Contract Act who is competent to contract. Now, the question arises whether HUF is a person or not. See, if we see income tax, it is only for a limited purpose. For assessment, it has been deemed as a person. So, Section 2, which defines person, includes HUF only under Income Tax Act. It is not for the general law or commercial law. So, under the Contract Act, HUF is technically not a person. And since the HUF is not a person, it cannot enter into a contract of partnership. Therefore, HUF cannot become a partner in a partnership firm. We have age-old decisions of Rasik Lal and Company, where Supreme Court has clarified that an HUF can never be a partner of a partnership firm. Now, we all know the Bible of income tax, which is called the Law and Practice of Income Tax. Mr. Palkiwala has written, law is something different and practically something different is happening. Practically in India, we have thousands of firms where HUFs are partners. However, as per strictly going to law, that is not permissible. And nowadays, what is happening? Awareness is getting created in many banks where they are having an account of partnership, and that partnership has a HUF as a partner. They are freezing the account and asking you to reconstitute. So this is the very important Supreme Court decision, Rasik Lal and Company, which clarifies that a HUF cannot become a partner in a partnership firm. Following this decision of Rasik Lal and Company, even Ministry of Corporate Affairs, in the context of LLP, has clearly said that if you cannot become a partner in a partnership firm, you can never become a partner in a LLP. So this has been clarified in the case of LLP. So in normal partnership, you may become a partner, but LLP, there is a specific bar by circular, and the utility and the forms also do not allow that a HUF can become a partner in a partnership firm. So HUF cannot become a partner in a partnership firm. What happens if the money of HUF is invested through Karta in a partnership firm? In those cases, the remuneration if given to the Karta will be deemed as remuneration of Karta in his individual capacity. Yes, but if the funds of firm have been invested through the Karta or HUF with a partner, what will happen? Any interest income on those funds which has been invested by the HUF in the firm will be taxed in the hands of HUF only. So HUF can invest funds through Karta, but HUF per se can never become a partner in a partnership firm. Then there is a very important concept of collective ownership. What is partnership? Partnership is a relation between two persons. So partnership is not a person. There are two persons, and the relationship between these two persons is partnership. Now, any property which is acquired under partnership is basically collectively owned by all the partners. So the property, all the rights in that property are held by various partners. Partners are owner of the property. Status of now coming from this, why partners are owner of the property? Because partnership is also not a person. You know, like HF cannot become a partner in a partnership firm, two partnership firm cannot form a third partnership. So two partnership firms cannot enter into agreement to form a third partnership firm. That is not permitted. In case of a partnership firm is holding the property, it is in turn held by the partners. So all the partners have a right in the property of firm, unlike a company where the shareholders do not have any right in the property of the company. In partnership firm, any property held by firm is in fact held by its partners. So many times when there is a retirement, if normal retirement deed has been written, even after retirement, the partner who was there when the property was purchased, he may claim any share in the property owned by the firm. So whenever you draft a dissolution deed or you draft a retirement deed, it has to be specifically mentioned that the outgoing partner is relinquishing everything, every right, every share he had in the firm in favor of the continuing partners. Unless this clause is there can be litigation. So it is very important to know. Second concept which Section 14 gives, any fund which is invested by the firm for the benefit of firm, the property may be legally under the name of some other person. For example, if I go to purchase a car for my firm, The registration card certificate is not issued in the name of firm. It is issued in my name or partner's name. What will be done? Section 14 says if the funds of firm are used for the benefit of firm, then in that case, the firm will be deemed as the beneficial owner of that property. So if I purchase a car in a firm which is registered in the name of partner, but payment has been made from my firm funds account and it is used for the business of firm, then depreciation on that vehicle which is registered in the name of partner can be claimed by firm. There are certain decisions based on this concept of collective ownership, section 14. So collective ownership is a very important concept. And anything which is invested from the funds of firm, the firm will automatically get a beneficial right in that asset. So this is very important. Then agency relationship. Each partner is the agent of firm and each partner is the agent of other partner. So I can do anything on behalf of firm and I can also enter into a contract on behalf of some other partners who will get bound by the agreement in which I have entered, which is related to the firm. So there is an agency relationship. This is considered to be a drawback, but this is also making simplicity and ease of doing business. Moving ahead, the biggest downside of any firm is basically joint and several liability. This joint and several liability, section 25, is very important. Suppose there are 10 partners and only one partner is financially well off. The creditors will sue that one partner and recover the amount, and that one partner who is harassed by all the creditors will recover in turn from all those nine other partners. Ultimately, my liability is joint and several also. So, any amount due from the firm, it is not necessary that you recover in equal amount with all the partners. You can recover from any one partner also. So, he is responsible jointly as well as severally. So, unless you want some protection, you can make suitable drafting in the partnership deed also. And it is always advisable that you have a very clear drafting in the firm. You should enter into the partnership firm and write that any recoverability will be first done from the firm, then from the respective partners in their profit sharing ratio. Different kinds of clauses for safety can be drafted, but the liability is joint and several, which makes partnership a deterrent for various businesses. Now, we all know liability is unlimited. What happens when there is a death of partner and there are only two partners? It is always advisable to have at least minimum three partners, because when you have two partners and one of them die, there is a decision of Muhammad Laifuddin versus Kamla Devi Mishra, where it is held by Supreme Court that whatever may be written in your partnership deed, it may be written that after death of any person, his legal heir will automatically become partner in his place. But if there are only two partners, so irrespective of what is written in your deed, it will be compulsorily dissolved. And when a partnership firm is dissolved, there will be liability under Section 9B of income tax as well as under GST, because all the assets will be deemed to be supplied. So you should always have at least three partners so that any mishappening does not make your firm subject to dissolution. Now, this is normal partnership firm. What happens when there are two partners in a LLP and one of them dies? There is a protection because the LLP has perpetual succession. So, what would happen? For the first 6 months, the partnership firm will be carried on by that single partner who is alive. And after 6 months, also, the firm will not get dissolved, but the liability of that partner will become unlimited because he is not complying with the condition and getting regularized by bringing another partner. So, if there are two partners in LLP and one of them dies for the first 6 months, the firm is protected by limited liability. After that, even after that, if another partner is not added, in such scenario, there will be in such scenario, there will be no dissolution, but the liability will become unlimited. We all have this very common wordings used in all partnership deeds that the duration of partnership is at will. Minded, this is one of the most dangerous clause. I'll tell you why. I am partner with Satish ji and Mohit in a firm. Now, Satish ji and Mohit both are from Rajasthan and the firm is doing exceptionally well. And now I want that my share is only 5%, but I want at least 25%. So I'll say, please give me 25% returns. They may say that you are entitled to your 5%, we'll give you that only. I said, no, I want 25%. They'll say, see, it is the partnership agreement. If you don't want, you may go out of the firm. I'll say, no, we will not continue the firm, dissolve the firm. Now they will say, we too have the majority in number and profit sharing ratio also. So why will we listen to you and dissolve the partnership firm which is running so well? I'll say the duration of partnership is written to be at will. And at will means at will of whom? So at will of any partner. So if I am a disgruntled partner, it is my will. If I say that the firm should get dissolved, you will have to dissolve. This is one of the most dangerous clause in almost maximum partnership deed which we write. So the duration of it partnership is at will is not advisable. Instead, you can write duration of partnership is at will of majority. There are various decisions which say that if any partner says the firm has to be dissolved, if it is at will. So it is better to have these kind of savior clauses where, see, I have written the partnership is at will, but the firm shall not be dissolved by unilateral act or notice of any one partner. Then how will it get dissolved? The firm shall be dissolved upon a resolution passed by majority of the partner who collectively hold more than 50% of profit sharing ratio, and such decision shall be communicated in writing. It is always advisable that you have these kind of savior clauses instead of just writing that the duration of partnership is at will. You can write that duration of partnership is at will, but it will not be at will of a single person. It will be at the will of majority. So this kind of important clauses are there. See, whenever we read Partnership Act, one fundamental principle, I'll say, we all know partnership is what? Partnership is a contract. And all the sections of Partnership Act begin with the word subject to contract, the provision is so and so. So, whatever, see, under company law, if company law says something and you have written opposite in memorandum, that memorandum will become ultra virus. This is not the case in case of partnership. Partnership Act may say something, but the provision begins with subject to contract. So whatever is written in your partnership deed will override and prevail over what is written in the Partnership Act. If the section bears the wording subject to contract, which are there in maximum provision. So whenever we are entering into agreement in any partnership, we should be aware that whatever is written in partnership contract with supreme, it may go beyond whatever is written under common understanding under the law also, even under Partnership Act. So this is important. Everything is subject to contract in the Partnership Act. Succession. There were four friends who entered into a partnership. Now, one of the friend has written in his will that after me, my son will become a partner. After his death, his son came that make me partner. The other partner said, no, we are not comfortable with you. We will not make you partner. He says, see, my father has written in his will. Your father's will is independent of our partnership contract. Our partnership agreement does not anywhere state that after the death of any partner, his legal heir will automatically become a partner. See, Partnership Act Section 21 says that a new partner can be admitted only on unanimous consent of all the partners. So, if any partner wants that succession should be there should be a specific clause in the partnership deed, which may write that it is mutually agreed that at the end of so and so years, a partner will have right to substitute his relative or legal heir as a partner in his place, or shall have right to share profits. So this is important. Wherever we want succession, we should write it in the deed. If we don't want succession, don't write anything. If there is nothing written and the partner dies, his son will get the share due to his partner will not automatically become partner of a firm. So this is important. Succession. Then division-wise partnership. See, there is a very interesting concept. I stay in Indore. I was already running a partnership firm with one of my friends, and we had equal profit sharing ratio. Now we feel that there is good scope in Jaipur, so we tie hands with, say, Mohit ji. Mera Mohit ji, we want to open a project in Jaipur, which will be my project B, and you, I, and Mohit, three will be partners in that project. So for Indore project, we can have partner A and B equal profit sharing ratio. For Jaipur project, we can have partner A, B, C, and D, which will have a different profit sharing ratio. So therefore, we can have division-wise profit sharing ratios. Take example, there is a law firm, so there is a mergers division. There can be different partners who will have different profit sharing ratio. For litigation team, they have different partners having different profit sharing ratio. So even under same partnership firm, one umbrella, there can be different divisions and different profit sharing ratios. Voting power. Normally, what may happen? One man, one vote. So if I'm having 98% shares, Mohit is having one share, say Rahul is having one share. So I'm having 98% share, 98 share, and you both have only 2% share. But if nothing is written in the deed, you two will always prevail over me. Why? Even though you don't have any specific right, but voting right is one man, one vote. So therefore, even you have only 2% share, but since you are two numbers and head count, I am only one. So therefore, you will prevail. So wherever we want a partnership deed, profit sharing ratio, anything, any voting power decision shall be qua your capital or profit sharing ratio. For example, there are four partners. So the profit sharing ratio can be qua the wherever there is voting, if I have written that four partners 25% each, that is my profit sharing ratio, and voting power is qua your profit sharing ratio, then three partners will have a majority. Unless if I have given example, I and Rahul and Mohit, three are partners, and Mohit and Rahul, they have two shares and I have 98 shares. Even that case, I may not prevail if nothing is written. So you need to write that it has to be for profit sharing ratio. So voting right is important. It has, if nothing is written, it is one man, one vote. Then moving ahead, some very important principles. Wherever we want some special matter, that firm is selling a property or a firm wants to take a big loan, you can provide that for such kind of important decisions. It has to be majority or three-fourth or two-third or unanimous approval of all the partners. So this kind of voting right for specific businesses can be written in the partnership deed. Minor. See, can a minor become partner? Obviously, yes, we all know a minor can become partner, but only for the profits of the firm. He cannot become partner for the losses of the firm. He will only share profits of the firm. Now, what is happening? If you want a minor, you can make minor as a partner in a partnership firm. What will happen? He'll get share of profits. That share of profit is exempt, so no tax on that. And then whatever remains with him as a share of profit is his own corpus, which he may invest, and whatever he may derive will be taxable in the hands of that minor only. For legal tax planning, you can make a minor as a partner in a partnership firm. But this is not allowed in case of LLP. In LLPs, minor are not allowed to become partner. Commitment to business. This is also very interesting and important clause. What happens here? I and Mohit are partners. Now we both are committed to the firm. What may happen that Mohit enters into an agreement or Mohit gives some advice and gets 50 lakh rupees as a fees. Now I will say, Mohit, give 25 lakhs to me. He will say, why should I give? This was my individual capacity. Then I'll remind him, whatever business we are doing in firm, you cannot do in your individual capacity. And if you are doing, I can recover that amount from you. Unless you have specifically mentioned in the partnership deed that every partner can do the businesses in their individual capacity and no other partner will have claim over the sum or property which is derived from the other partner. So this commitment to business section 9 is also very interesting and important provision. Every partner will have to share unless there is a clause. Then taxation. How is the taxation of a partnership being governed? So as far as taxation is concerned, there has to be a written partnership deed, which is mandatory, and the share of profit should be defined in the partnership deed. So if there is a no written deed, then the partnership is not a partnership. It will be considered as AOP, and the remuneration is not allowable in those cases. If individual partners do not have profit sharing ratio, then it is not a valid partnership. Then also it will be triggered as AOP. When you convert a partnership to LLP, what happens? So see, for income tax purposes, LLP is also a type of partnership. So there is no change per se. And partnership to LLP or LLP to partnership, the implication under tax is tax neutral. There won't be any implication. There is a circular also clarifying this concept. So there is no transfer, but vesting of assets by devolution of law when there is a partnership form to company. It may so happen that a partnership firm converts into company. This is called part 9 conversion in earlier era. Whenever there is a part 9 conversion, what happens? Earlier, I was wearing a coat. Now I am wearing a jacket. So what has happened? The person inside remains the same. Only the cloak has changed. So partnership form to company or company to LLP. Ultimately, there is no transfer. There is a devolution of asset or vesting of assets by virtue of law. So there should not be any tax under these kind of transactions. Whenever you change a deed or revise a deed, there is a provision which requires you to file the revised deed with the jurisdictional assessing officer. Now you will say, how can we file and what will they do? Simply go to income tax portal, search know your AO. You will get the email ID of AO, mail the revised deed to the jurisdictional assessing officer, because nowadays things have changed and this provision has almost become redundant. But for the purpose of compliance in this law, we should follow this practice that we should send the revised deed on email to the assessing officer. Status of losses. See, whenever there is a change in constitution of partnership firm, the losses pertaining to the outgoing partner will go with him. The only exception are inheritance. If the father had some losses and after death of father, son is continuing as a partner, he will enjoy the benefit of all the losses in the firm. That will not go. And second is unabsorbed depreciation also, because unabsorbed depreciation is never passed. It is always deemed as the loss of the year under consideration. So that will not lapse. Otherwise, the losses may lapse in this scenario. Then agricultural firm. Can firm do agricultural activities? Obviously, see, agriculture is the income derived from soil or agricultural land. Who does it? Be it company, be it firm, everybody is allowed. So firm can also have agricultural income. Now, what happens? I am a partner. I take funds and I invest in the partnership firm as my capital. So whenever capital is received by the firm from its partners, it can never be considered as unexplained cash credit. So even if the source is doubtful, what department has to do is to go behind the partner and see what is the source of that partner. If the source is unexplained, addition can only be made in the hands of partnership firm or a partner, individual partner, not in the hands of partnership firm. So firm may receive the money, but since it is received from its partners who are having their identity clear, so no addition can be made in the hands of partner. Partnership firm, it will be only made in the hands of the individual partners. TDS, these new provisions are there. First of all, what is the remuneration? Now, remuneration limit has changed. I'll first deal with the remuneration limit. Instead of 6 lakhs, see, earlier the limits were 3 lakh 90% or 1 lakh 50,000, whichever is higher, on the balance 60%. This limit is retrospectively increased to 6 lakhs from the assessment year 25-26 for which you are filing the returns. But you need to see what is written in your deed. If in your deed only you have written up to 3 lakhs so much and more, then there is a problem. But if you have linked it with the limits under 40B, then the position will be different. So this limit of 6 lakh is increased with retrospective effect. Now coming to the provision of TDS 194(3)(t). This is a provision where the threshold limit is 20,000 rupees annually. Deduction will be at the time of payment or credit, whichever is earlier. Applicability from financial year 25-26, AY 26-27. So all the partnership firms, earlier it used to happen that many partnership firms did not have a 10. Now 10 has to be obtained in all cases by the partnership firms. And for assessment year 26-27, financial year 25-26, this TDS has to be deducted. It has to be deducted on what? On the remuneration. How much? 10%. 10% TDS on salary, commission, remuneration, bonus, interest, capital, interest on loan, etc. Now, where will the problems be there? So see, the problem will first come if I am having balance of opening balance 20 lakhs and I'm paying 1 lakh rupees per month, not remuneration but drawings. So it will be considered that this is basically created earlier. So on the to the extent of opening capital, no tax. But if in the partnership deed it is written that there will be monthly remuneration accruing 1 lakh, then you have to deduct on accrual or payment whichever is earlier. Otherwise, in maximum cases, what will happen? If every salary, remuneration, everything is accruing on 31st March 2026, which is going to happen this year, if it is deducted, it will be deducted on the last day, otherwise, no deduction. If I am having opening capital, it will be deemed that this payment is out of opening capital, not of the remuneration. If I am having a debit balance of capital and some remuneration is withdrawn or credited, that will be considered as remuneration and subjected to tax under 194T of the Act. This is one of the most absurd provisions because partner and partnership firm both are considered as the same person. So there was no need for bringing TDS on this. Some sample clauses I have given where how partnership deed should be drafted and remuneration clauses should be drafted is given for the purpose of members. Then, if TDS is not deducted, what will happen? Form number 26A can be obtained if the partner has filed his individual return offering the income in his return and paid the interest. Then, as per the second proviso of section 40A, the assessee will not be deemed to be default. But it is always advisable to have the tax deducted during the year under consideration. TDS on non-resident partner section 195 apply as earlier. If I'm a partner in a partnership firm and partnership firm gives me remuneration, can this remuneration be offered as income under 44 AD or ADA, depending on the nature? No, because this is not for working of the firm. This is the profit derived from the firm by the partner. This is not for the business carried on by the partner, but business carried on by the firm. So therefore, partner's remuneration, there is a decision of Madras High Court also recently. It will not be entitled for presumptive taxation, be it 44 AD or ADA. No remuneration to sleeping partner. This is the age-old concept we all are aware. What is the limit for which remuneration can be derived if my remuneration is created in my profit and loss account? Anything which is created, if even interest is created in profit and loss account, 90% has to be seen for computation of permissible remuneration based on whatever is created in your profit and loss account. Even if you're declaring some income in survey and it is shown in other income, the profit and loss account, you will be entitled for remuneration on that amount. How to determine book profit, I have already explained. Any credit in profit and loss account, be it income from other source or business income, everything will be considered. Even if something is declared in survey, that has to be considered for deciding the additional remuneration. Specified services. Now I am a partner of the firm and I'm also an astrologer and I am giving some astrological advice. That advice is for my special skills and services and that will not be considered under section 40B of the Act. That limit shall not apply to this type of thing. Restructuring. There are different provisions in the partnership firm. Earlier, what used to happen that some partners may come and some partners, old partners may go. Before going, the asset was revalued, so the partners used to draw heavy amount and that was not subjected to tax. Then came the decision of Mansukh Dyeing and Printing Mills by Supreme Court, where this revaluation profit is subjected to tax. However, we need to understand that the law itself is changed. 45(4)(9)(b) and 45(3) are there. Whenever you are bringing an asset to the partnership firm, it will be taxable in the hands of the partner because there is a transfer. But what will be the deemed sale consideration of partner? The value on which the asset is recorded in the books of partnership firm shall be deemed as the sale consideration. Now, it may so happen that your guideline value is 1 crore and sale consideration is basically, or you have recorded for rupees 50 lakh in the books of accounts of the partnership firm. What will happen in these type of cases? Specific provision is 45(3), it will prevail over 50C. So you have to take the value recorded in the books of accounts only, and whatever may be the guideline value is not relevant here. When you get any asset from the firm by way of distribution, Section 45, 4 and 9B applies. And one partner sell his shares to another partner, and whatever consideration is there, which is passed on between these two partners per se, in those cases, Section 45, 1 applies here. 45, 4 and 9B, these are very important provisions. See, 45, 4, what is the formula? I'll tell you. The charging condition from transfer is now shifted to receipt. So whenever a partner who is a specified person receives something from specified entity, which is a partnership form and which is subject to reconstitution. So if it is receipt, has brought here. So 45.4 applies on all kinds of reconstitution. Now 45.4 says that there is a difference between 45.4 and 9B. 45.4 says if any money, that means check or cash, is passed on, or a capital asset goes from the firm to partner. See, one very important thing, in any of the scenario, it is only the firm which will pay the tax. Partner will never bear the tax. The liability is every time on the partnership firm only. So, if the firm gives any money or capital asset to the partner on retirement, Section 45.4 provision will attract. And if the partner gives any capital asset and stock in trade, then 9B will apply. So for capital asset, it will be taxed both under 9B and 45.4, both the provisions. How the gain will be taxed? A is equal to B plus C minus D. A is the gain. So value of money, value of capital asset minus balance in the capital account, and you will determine how the gains will come. For example, I am receiving 50 lakh money and a plot of 1 crore. So my total receipt is 1 crore 50 lakhs and my capital balance is 20 lakhs. So out of 150, 20 will get minus, the remaining 1 crore 30 lakhs. This is my capital gain. And if so happen that I am receiving 50 lakh money, capital asset is also for 50 lakh, but my capital balance was 1 crore 50 lakh. So there is a loss of 50 lakh. This loss will lapse. In Hindi we say chit bhi meri, pad bhi meri, dahiya mere baap ka. So if there is a gain, it will be taxable. If there is a loss, it will lapse. Nobody will be benefited from that loss. Any revaluation, what may so happen that I have a property, I have got to revalue. So any revaluation has to be ignored for computing this D, balance of capital. Whatever is the capital balance in your account, if you have done some revaluation and credited it, that is not considerable. That has to be reduced. So 45.4 is a tax on the gain of partner paid by the firm, and 9B is gain of firm paid by the firm. We'll discuss it further. Then what will be the rate if the long-term capital gain 12.5% is the rate? That is very interesting and better provision. What happens on the death of partner? See, the provision says you have to receive from the firm to partner. And on the death of partner, it is not received by partner, but the legal heir of partner. So the provision does not apply here. So receipt is not specified person per se. So therefore, and it occurs after the death of the person. So therefore, in case of death, the charging fails. If there is an internal reconstitution, the test is that there should be a receipt in the hands of partner from the partnership firm. If that is not there, 45.4 9B does not apply. If I am receiving consideration in hello.
नाव एक आम्ही फक्त टाकतोय तुमचं, बाकी झालंय, कनेक्ट झालंय.
Hello.
बरं. सांगतो.
Correct. Now, there is a piecemeal distribution. For example, there are 3 years. I am receiving 75, 50, 30 in 3 years, and my balance in capital is 100. So if first year I minus, there will be a loss of 25, which will lapse. But no, whatever is not paid during the year also becomes liability. So 75 plus 30, 105 plus 155 minus 50 has to be there, and tax has to be paid in the first year itself, though the consideration is deferred and I am receiving it in future. Right, sir? If the value of capital is negative, what will happen? For example, my capital is minus 50 and I'm receiving 100. So whether the minus 50 will be deemed as 0 and 100 will be my gains, or you have to consider 150 minus 0 minus 150. So total of 150 being the gain. So there is a decision of Sumit Security Special Bench which clearly says that you have to be arithmetical. So it will be minus 50 minus 150. So it will become, say, minus figure will come. Then 9B. When the firm is giving capital asset or stock in trade, not money, to the partner, then this provision will apply. What happens if the asset is capital gain? You normal, yeah,
Pankaj sir,
yeah,
sorry to interrupt you. We
yeah,
have to just compile in next 5 minutes because we have some queries as well. So we have
yeah.
to take the queries.
Just last 1 minute.
Sure, sure, sir.
Section 9B is there. 9B says that if the capital asset, compute capital gain as per capital gain provision. If there is a business profit, stock in trade is transferred, so then it will be as per normal business provisions. See the simple example. I have cash of 100, capital asset 100, which is having 300 value, stock in trade 100, 600 value. So, an agricultural land 100 having fair market value of 600. So, capital asset 100 and fair market value 300. So, my capital gain will be 200. If there is a stock in trade 100 and 600 is the market value, so business profit will be of 500 and a suitable tax will be levied on this both. So, this is simple exercise. When there is a dissolution, only 9B will apply, 45(4) section will not apply. There are some examples given by CBDT in their circulars 14 of 2021. Three examples are given. These are very important, which will explain you how to apply your tax and how to do the attribution. Whenever there is an attribution, you have to file form number 5 and see. Whenever you plan to do some aggressive planning in or some kind of device, you need to be aware that there are general anti-avoidance rules which may apply, and check on your planning or whatever.
Uh, Valuable insights that have been shared to our August gathering. I would like to, it would be grateful to announce that we have more than 270 members of our fraternity, those who are watching this webinar and taking this deep knowledge on the session that have been taken by our eminent faculty, CA Pankaj Shahaji. Sir, we have a number of the questions, so I would like to take first question.
Please.
Up to what time, there is a one member, the respected member, CA Ajit Thakur, is from Mumbai, is asking the question. Up to what time balance amount of deceased partner have to be settled when firm has no sufficient balance or financial status of a firm is weak?
See, there is no time limit given in law. The partner may claim it. It is always on demand unless it is agreed at the time of. So whenever he is demanding, the partnership firm has to give to the legal heirs of the partner. If the partnership firm is not having status, you may file a suit in the court and do some recovery exercise. Next.
Next question is from Anurag Gupta, and Anurag Gupta is from Noida. Is asking the question: if partnership takes presumptive taxation, 90% profit up calculation still applies?
See, 90% profit remuneration is already deemed to be allowed. So whatever remuneration you have given or not given, it is already deemed to be allowed as per law. Your 8% or 6% is after considering that your remuneration has also been allowed. So it is irrelevant.
Okay. So thank you so much being with us for this sharing your thoughts and wisdom.
My pleasure.
I can say thank you on behalf of CPE committee for your valuable time. Thank you so much. Thank you, sir. Now I would like to welcome our next eminent faculty of this 360-degree webinar on the 60th webinar that we are going to take place today. I welcome CA Uday Kulkarni ji. CA Uday Kulkarni ji is a practicing chartered accountant with over 20 years or 28 years of professional experience in banking audit, IS audit, cyber security, forensic accounting, fraud investigation, and IBC advisory. He is a fellow member of ICI, IIA from USA and ICASA from USA, and holds multiple qualifications including FCA, CIA, CISA, CDP, SE, and insolvency professional. He is an panel faculty for the ICI certificate course on forensic accounting, concurrent audit, and prevention of money laundering. He has delivered lectures at prestigious institutes such as National Forensic Science University, RBI Academy, and SFIO. He also contributes as a member of ICI expert group on forensic accounting and investigation standard. So with a huge round of applause, now welcome on this webinar our next eminent faculty, CA Uday Kulkarni ji. Sir, I welcome you on this 360-degree webinar on the 60th webinar on the behalf of our chairman, respected chairman, CA Satish Kumar Gupta ji, and our vice chairman, CA Vinod Kumar Agarwal ji of this CPE committee of ICI and the entire fraternity. Sir, I also would like to introduce the topic that CA Uday Kulkarni ji is going to take by today. This topic is digital personal data and role of a chartered accountant. Digital Personal Data Protection Act and role of chartered accountant. So I would like to invite our next eminent faculty, CA Uday Kulkarni ji, to please take over the dais, to please take over the webinar, and let's share your wisdom of thought. Sir, please.
Okay, good evening, Mohit, and good evening, all the participants. I hope my audio is clear, Mohit.
Sir, yes, your audible is very clear, and more than 270 fraternity members have joined your webinar.
Okay, so at the first beginning, I would like to thanks to the CPA committee who has given me the opportunity to speak on the 60th of their webinar in this year, and that too on the very important topic, that is the Digital Personal Data Protection Act and the role of a chartered accountant. So I hope also my PPTs are visible to all of you. And yeah, okay, thank you. So thanks, Mohit. Thanks for your kind and energetic introduction for me. And I will now start with our agenda for the today. So all the participants, very good evening to all of you.
Sir, sorry to interrupt you. Sorry to interrupt you. I would like to mention into our knowledge of the participants, you may ask the questions by using the chat box, and the question will be taken care after the session completion. So I request you to please put your queries in the chat box, और हम क्वेश्चंस को सेशन के बाद लेंगे. मैं आप सभी से निवेदन करता हूं, जो भी मेंबर्स हमारे साथ जुड़े हुए हैं इस वेबिनार के साथ, कि आप अपना कोई भी प्रश्न अगर पूछना चाहते हैं तो आप चैट बॉक्स के माध्यम से पूछ सकते हैं. हम उन क्वेश्चंस को, प्रश्नों को वेबिनार्स कंप्लीट होने के बाद आपका क्वेश्चन टेकअप करेंगे. थैंक यू सर, प्लीज ओवर टू यू. थैंक यू.
Yeah. That was an important announcement, Mohit, you made, because this session, actually I wanted to be very interactive, but nevertheless, we are connecting with this digital domain, and I think you can put your questions, thoughts, anything in the chat box, so that Mohit can take it up after the session, once my thought flow is over. So all of you, we are all now aware about this Digital Personal Data Protection Act. It is enacted in 2023. Although the rules are not yet finalized and the rules are yet in the draft mode, and recently the Ministry for Information and Technology, they have declared that from their point of view, the rules are finalized and it is submitted for the approval for the legal team and so on and so forth. So the process is going on for the finalization of the rules, which is a part of this act. But even before that, there is a lot of talking going around. Not only talking going around, I hope all of us are actually experiencing something related to that in the present status, right? So for the last 2-3 years, if the chartered accountants, what they are experiencing, the change in certain ways of their practices, right? So the biggest change which is getting visualized for the chartered accountants is related to the bank audit. I mean, I am talking with various chartered accountants who are conducting either the concurrent audit or the statutory audit or any sort of other audits in the banking sector or the insurance sectors, in short, in the financial sectors. So they are facing some challenges, right? What is the challenge? Challenge is that now banks are now restricting that the auditors shall not carry any document, any data out of their secured environment, right? So this is the biggest challenge, because there are a lot of standards, there are guidance note and all these things which requires the auditors to keep the working papers, right? That is mandatory, because the standards on internal auditing, the standards of auditing for the statutory audit, all those specifically say that the auditors are required to keep certain the document as a working papers. and also those documents for which are actually used for forming the opinion during the audit procedure. So there's a lot of things which we collect either in the form of copies or something like that. Or recently we have started collecting those things in the digital way, in the electronic form also. So we are taking the soft copies, right, or we are taking the scanned copies of the papers and so on and so forth. So we are very much used to that, let us say for the last 10, 15, 20 years. And suddenly from the last 2 or 3 years now, after enacting this 2023 Act, now you are actually facing this situation. So banks are restricting you. Banks are not allowing the chartered accountants to carry out any data outside their secure domain. And that happens not only the restriction, but it is largely affecting the working procedures, the audit procedures, right? And how to deal with that, that is one of the very challenging thing which the chartered accountants are facing. Of course, the banks are taking this conservative approach because of this data protection act, because the bank data, we all know, that contains a lot of digital personal data of their customers, and they don't want any risk that handing over that data to the chartered accountants that will get exposed, and there should not be any breach of that confidential or digital personal data. So that they are taking this view. Of course, this view is already taken before the declaration or notification of that particular rules, but still it is going on, and we are witnessing that. Now, one more thing which the chartered accountants are experiencing, that earlier there was a NTA, and that is a part of our code of ethics. So we are following and complying with our code of ethics. There is a confidentiality, which is a basic principle which all the chartered accountants are bound by with the code of ethics. That those are the principles. I mean, we are never expected that somebody shall tell us that all whatever the dialogues are happening between the auditee or the client and the chartered accountants, those are the things which are very confidential. But now, if you see the various entities, some companies, or even the banks and insurance sectors, whenever they are handing over any of the data or the documentation, or they are appointing us for any of the work, now they expected the chartered accountants, even as an auditor, to sign with the NDAs and the service level agreement, right? This is also coming out of some of the impacts as a part of this Digital Data Protection Act. And sometimes again, these SLA or NDA requirements, sometimes some auditors may feel that whether they are becoming some of the hurdles or restrictions in my audit work procedures, and how to handle that. Because again, in that NDAs and SLAs, those institutions, those entities are specifying that the auditors or the chartered accountants cannot take away the documents data in any form, whether it is physical form or whether it is a electronic mode. So that is the things which are happening. One more change I think we all are expecting and experiencing with the website access. So when you are accessing various types of the websites, whether it could be the generic website, whether it could be the specific website of any entity, you will find there are a lot of concerns related to the cookies which are required to be given. And that is a very fundamental thing which everybody has to understand, because that is the thing which is related to the profiling, and actually it is related to the our digital personal data, because the tracing out of the IP likes and dislikes of any person, that may also comes as a privacy part, or also it may comes as a very personal data which needs to be protected, right? So you are experiencing that without understanding what are the cookies. Many of the times by default we say accept all, right? Because sometimes we feel that if we don't accept all, then how this website will work, we will not get all the results. So all these things are running in our thought process. Then we are also experiencing that some of the OVDs, here OVDs means official valid documents, which we can call, this is the terminology which is used in the PMLA, but we can call that Aadhaar card, PAN card. These are the official documents which we submit for the KYC purposes, right? So when we submit that in the digital form, you will find that you are getting some of the digits of those documents are masked, right? And only last 4 digits or 3 digits are visible for you. Then there is a lot of talk right now about the digital arrest kind of a cyber frauds, right? And that is actually become a national issue, right? And the government is also taking a lot of efforts, you know, to control these kind of frauds and to make awareness amongst the people at a large scale so that they could not become the victim of these digital arrest kind of cyber frauds. Surprisingly, why this? So, if just day before yesterday, I was thinking about that, and I noticed a pattern in this kind of a fraud. So, if you read the news related to the pattern, you will find that the more of educated or learned persons, those are becoming the victims of this they are becoming more of this, you know, victims of this. So you will not find that the uneducated or unlearned persons are the victims, but the learned and the educated. You will find that the doctors, the professors, right? These kind of a very educated persons are actually becoming the victims of such frauds. And that triggers me why this kind of an scenario is happening, because I can understand that some of the uneducated unlearned or very less learned persons, those could be the persons who would become the victims of such kind of an frauds, but it's not like happening like that, but it is the persons who are very educated, those are becoming the victims of such kind of an frauds. So that is the pattern which we observe. Then again, the artificial intelligence, which is nowadays becoming in use on a large scale. Yes, there are some good causes, there are certain bad causes, which taking phases for this artificial intelligence, and we all know that the technology can be used for the good causes as well as for the bad causes. Now, what is happening if a person's photo, right, is available on the social media, that can be easily converted with the help of the AI for any unwanted purposes. And so many deepfake videos, so many deepfake kind of and things with the personality of a particular person's. Those things are happening with the help of the advanced technology, that is artificial intelligence. So all these things, if you see why I have pointed out, somehow it is related to our digital personal data, because now we are representing ourselves in the form of a digital or virtual way in this digital domain or all the places on the digital world, right? So it is the virtual reality of ours and or our virtual personality in this digital domain. So all of them are playing with that virtual personality, and virtual personality is definitely going to impact the physical personality, right? And that's why you can understand the importance of protecting our virtual personality, right, which is there in the electronic or digital form, right, on various social media platforms or wherever. And that is the basic thing which is expected to be protected by this kind of an act. So, of course, one of the objective of this act is to protect the this digital personal data, right? And when we are talking about a protection, so now just imagine what is the quantity of the data which a particular single person is sharing on various digital platforms. Just imagine. I don't think there is a person who has not shared any single amount of his personal data on any of the social media platforms. We have to somehow share our personal data on various social platforms. We have to agree to that. But we are not thinking that not only we are sharing the data, but by that way, we are sharing also our personality, right? And if somebody will play with that virtual personality, that is going to impact my physical personality. And that's why the protection of the digital personal data has been accepted as some fundamental rights in some of the countries. And then the world has unanimously thinking that now protection of these digital personal data is something which is fundamental. And they are expecting an ecosystem from every country to protect the digital personal data of every country's citizen. And that's why the GDPR, which is well known for its protection related provisions, accepting some of the rights and accepting that as a fundamental thing. So that has been followed by other countries also, right? And now it is affecting the business also in a way, because the countries are restricting. Let us say that if any Indian company is processing any of the data of the European citizen, let's say we are in the accounting field. So if we are doing the accounting on behalf of some of the company which is a part of the European Union. So the European Union GDPR Act requires that you can allow to get these services from those countries which are having equal data protection kind of an act, right? So we now are bound by those kind of an legal ecosystems, where the European Union's GDPR requires that if the European Union's company is outsourcing any of its accounting works to the Indian firm, they wanted to ensure that in India, similar kind of an act should be there, number one. Number two, the citizens' data, European Union citizen data, which is handled by the accounting firms in India, that also should be protected as per the provisions of that GDPR. So similar kind of conditions are there in this Digital Personal Data Protection Act 2023, which is enacted in 2023. So the protection is at the base level, fundamental things. And when we say that protection, then the second objective obviously comes that whatever the data we are sharing with any other entity, those data should be used only for the lawful purposes, right? And this is not only the conditions applicable only the companies which are using this data of the Indians in India, but if any company gives using the data of Indian citizens outside our country, let us say some of the company is using our data, our personal data in their country, for those countries, the provisions of this act is applicable. So this is on the similar ground of other countries' law. So every country is binding the firms or entities in other countries where the digital data is getting shared, right? And that's why they are building some ecosystem whereby the virtual data, virtual personality of any of the citizen that should be get protected. So that is the larger objectives of this. And we need to understand, we know that what is data. Normally, everybody shares his name, address, date of birth, mobile number, email, all these data, and we don't think that such data carries certain values, right? And we don't think that what can go wrong if I share these things. We never think about that. We don't understand the risk related to that, right? And that's why the protection by understanding the risk, as I said, why? What is the risk? Because if it is used by the persons which is not in a legal way, which is with the violations of any of the provisions of the law, then it troubles a lot. And that's why they have defined what is data. They have defined what is digital personal data, and they have also defined what is personal data. So basically, they are defining the data which is related to any individual, and by that data, any individual can be identified. Right. So my name, my my identity, my name, my date of birth, my mobile number, all those things are actually identifying me as a Udaipur. My photograph is a document which identifies a particular person. So all such data which is treated as a digital personal data needs to be protected in a well manner. So they have defined under this act what is data, what is digital personal data, and also. And they have defined certain interesting concepts like data principal, data fiduciary, data processor, nominee of the data, right? So these are the concepts which are coming out of this Data Protection Act. And why I'm telling this? Because somehow this Data Protection Act is going to impact on us as a chartered accountant. It is going to impact on us when we are providing services to our clients. Right? So we need to understand that what are those impacts. I'm not going to deal legally too much into this definition right now, because I'm more interested in discussing with what could be the impact of this Data Protection Act on our practice areas, right? But for that purpose also, we need to understand certain definitions, certain concepts of that, because without understanding those concepts, without understanding these things, if we try to implement that, then that will be of no use. So it is very necessary to understand which are those concepts. So basically, they have introduced one concept, that is data principal. So who is data principal? So in my case, if my name as a Uday Kulkarni is getting recorded, my mobile number, my date of birth, my email address. So for all these data, I am the data principal. Right. So the person whose data we are collecting, in our case, it is the client, it is the auditee, right? We are going to collect the data of them. Let us say we are filing the income tax return of some of the client. So obviously we will collect the PAN number, Aadhaar details, his mobile number, his email, his name, his address. So that client will be called here for such a data principal. And let us say if we are, or any organization, because when we go to the bank can allow to open the accounts of a minor, right? So in that case, who would be the data principal? So the act is very clear. Act says that whenever we are handling the data of the minors or of a person who is yes, sir. Sorry, I'm not changing. Whenever I will change, you will come to know. Okay. So, sorry, I got my link disturbed by this tech interruption. So I was discussing when we go to the bank, the banks are allowing us to open the account of the minors, right? So in that case, who would be the data principal? So on behalf of minors, their legal guardian would be the data principal. So the data principal would be the person to whom that data belongs. So in our case, our clients, our auditees, those would be the data principal. The second concept they have brought, a data fiduciary. Who would be the data fiduciary? The person who is collecting the data, those are the data fiduciary. So we are collecting the data of our client. So in this case, the chartered accountant firm, they would be the data producer. And we are collecting for certain purposes. Similarly, the banks are collecting the data, insurance companies are collecting the data, the companies are going to collect the data. So all of them who are collecting the data, they become the data producer. So in short, all the business entities, all the service providers, all the professionals who are collecting the data, those will be treated as a data producer, right? So in our case, if we want to understand from our practice perspective, so we are going to call as a data fiduciary for the perspective of this act, right? And as I said, we are going to collect the data for our accounting services, taxation services, advisory services, even sometimes for the audit related services, right? So there we are directly collecting the data from our client, from our audit. And for that purposes, we will be called as a data fiduciary under this act. And why I am discussing that? Because there are certain obligations which are casted upon the data fiduciary, right? So when we are going to act as a chartered accountant, we are going to act as a data fiduciary while we are collecting the data. And when we are collecting the data, there are certain obligations on us which are there under the provisions of this act. So that is the chain, and that is how it is going to impact on our work procedures. It is going to impact on our practicing things, right? And some of those things I have already quoted, that when we go to the bank, the banks are not allowing us to carry some of their. Why? Because bank there is acting as a data fiduciary. What we are doing in the bank, we are verifying the loans, we are verifying the deposits, but the deposits are of some customers. The customers could be the individual persons, right? And for that data, the bank is data fiduciary. So same obligations are there on the bank as a data fiduciary, and they are worried. They want to apply the provisions of this act, and that's why they are not allowing us to carry out those things for our audit procedures also. I think this will require a larger discussion. I'm not going to take a lot of call on this, but this is going to be this is going to happen a larger discussion on that. Now there is one more concept that is called as a data processor. So to understand this concept, now let us say that that we have opted for an accounting software which is in the cloud environment. The accounting software is not installed in our environment. We are not installed that in our server. We are not installed that on our laptop, but we are accessing that, and that is installed somewhere in the cloud environment. So now what is going to happen? Whether the database is localized, answer is no. So database is also with the cloud environment. The application by which we are processing the data. So let us say the taxation related or accounting related software, where we are processing the data. What we are doing the processing means, we are actually putting some entries, we are getting the taxation related results, or whether we are getting the accounting related results, whatever. That is a processing. So where the processing is happening at the cloud environment. So what is happening here? In a way, collecting the data of our client, right? But data is now getting shared with the cloud vendor, cloud service provider. Another example, when we get the personalized debit card, ATM card or a credit card, let's understand that. Whether the bank itself prints those cards, prints those stationery of the cards, answer is no. What does bank do? Banks hands over those data of our personal things to a vendor who actually prints that data on our card. So that is a vendor. So in this concept, the bank is data fiduciary. The vendor who is supplying the cards, he or she becomes the data processor. Similarly, in our case, if our accounting software or taxation software is on the cloud and we are accessing those applications, databases at the cloud environment, our client's data is going to be shared processed with the help of that cloud service vendor. So those arrangements will fall under the category of a data processing, right? Then what is data processing? That is defined. Normally, we know what is data processing, but this is very important because normally we feel that processing means only once we enter the data into the system, into the software, then only processing starts. That is what our understanding. So once I insert that, let us say I'm punching the name in the taxation or the accounting software of certain clients. Then we think that the data processing starts, but that's not the case. Before that, collection is also one of the important steps, right? So we may collect. How we are collecting? So it may be possible that we are collecting by using some paper-based form. So we may give the client particular paper format on which the client may write his name, date of birth, and all the details. So that collection part is also covered under the data process. In some cases, it may happen that there could be 2-3 agencies who are actually collecting the data, handing over to the main service provider. It is also likely that. So there could be some agents who are saying, let's say, the SIM card. Now, actually, who is collecting the data for those telecom companies, telecom service provider? It is not the telecom service provider who is collecting the data. Who is collecting the data? Agents are collecting data. Let us say for insurance companies. Insurance companies not directly collecting the data. Who is collecting the data? Agents are collecting the data. How they are collecting the data? So they are following certain paper things, and by that they are collecting the data. So collection is also a part of this data processing. It may be possible that some of the organizations may outsource collection part. They will only process. So there are lots of permutation and combinations may take, and all those processes, right, are covered. Even the transmission, sharing, use, retrieval. So all those things, what we do with that particular data, all those stages, all those activities are brought under the definition of data processing, right? Then what is the offense under this act? Why the lot of things are getting under this act? So the offense is personal data breach. What is the offense under this act? It is the personal data breach. Means what? Personal data breach means the use of this digital personal data for illegal things, or the use of the data without obtaining the consent. Consent is also important. So largely they have defined what is the offense under this act. So any unauthorized processing. Unauthorized means what? The client has not given you the permission for certain things. What does this mean actually? So normally we feel that when we share our this mobile number, name, email, certain things, many of the times we feel that let us say you go to some mall for the shopping purposes, and obviously they ask such data, right? So once you complete your all the purchases, and when you go to the billing counter, they ask you the number of patients. What is your date of birth? What is your email? What is your mobile number, and so on and so forth. And without asking why you are collecting such data, how you are going to use my such data, we hand over that data. And then suddenly, after a few days, we start receiving their advertisement through the messages, through the WhatsApp channels, or through the emails. We start getting their advertisements. Whether your intention was there to hand over your personal data to them to receive that advertisement, of course not. It was not like that. But suddenly what they did, they acquired your data without telling you that this data is going to be used to circulate their advertisement. If that would have been known to you, you might have said no for sharing of such data. So before obtaining now the data from any person, we have to tell them how we are going to use this data. What is the purpose for which we are going to use the data? So in our case, now let us come back to our practice. When we are collecting the data, right, for the taxation purposes. Now whatever the fields of the digital personal data we are acquiring, again I am repeating, that is name, address, date of birth, email, photo, right? So all these digitally personally identification features which we are collecting in the form of data, now we have to tell to the client how we are going to use that data. What is the purpose? And we have to restrict within that bounds. Right? If you want to share that client, let us say there is a budget which is published in the month of February, and now you want to share some of the outcomes of that budget to your clients, for whom we are filing the income tax returns. Earlier, what was our practice? We used to circulate whatever is our analysis on the budget to all our clients by using their mobile numbers, WhatsApp, and so on, or emails. But now, when you are collecting the phone numbers, mobile numbers, emails, you have to tell them, see sir, madam, we are collecting the data for filing of income tax return, whatever the necessary. Second thing, we will also require the consent from you. If we can share with you on these mobile numbers or emails, the analysis for budget. Because it may possible that some of them may like, some of them not like. But the consent is essential. Without the consent, if you share the budget analysis to them, they may get disturbed, and now they have got the weapons of this provision, personal data breach. So some of the clients may come and say that we have not given the data, our personal data, to you for sharing the analysis of the budget. Right? So we cannot now by default assume that the data which we have captured, we can use in any manner. It's not like that. And if without the consent means authorization. Without the consent, unauthorize the process. If without the consent, if data is processed, now here what I am doing, without their consent, I started sending them the budget analysis. They may treat that it is unauthorized processing because I have not given you the consent for this. Accidental disclosure. There was no intention from our side to make the breach of their personal data. We don't want to disclose that. But how that has happened? Because of our business practices, because of our procedure which we follow in our firm. So we need to understand that how we are obtaining the data on the paper, preserve that paper well. How we are handing over the data to our assistant, to our articles, pen drive, and let us say you have given that data to your article on the pen drive of certain client, maybe for official purpose, maybe for filing of the income tax return, and that pen drive is dropped somewhere without any intention, it was lost, and through that any personal data got leaked. Of course, there will be the investigation, who is responsible, all those traces, evidences, all these things will be there. But the risk is that the data which we collected as a data fiduciary and which we are supposed to protect it, that is getting leaked. Second way is that we are sharing our data to our articles, our assistants, let us say on their personal emails. Many of the times this happens. If somebody hacked their personal emails on which we have shared the data, and through that our client's data got leaked. So these are the risks which we need to understand. So without the consent using of the data, if we are not adequately protected whatever the data collected from the client, unwantedly we have shared the data without asking the consent from the client, we shared the data, we use the data. See, and this is not for the chartered accountants, even as a person, as a chartered accountant, if that person is sharing the data with other persons, with other entities, the same rules are applicable. Right? So confidentiality, integrity, and availability of the data, these are the fundamentals for the security in the digital domain. Confidentiality, integrity, and availability. CIA, those are the fundamental things for the digital security. So as a chartered accountant, we should be aware about that. Of course, the rules which are applicable for us, similar rules would be applicable for the entities where we as a person are sharing the data. So if you share the data in the mall, if you are not given the consent for the advertisement, if you receive the advertisement, now there is a mechanism. Now you can lodge the complaint. So complaint mechanism is all set under this personal data, Digital Personal Data Protection Act. Right. So of course, this is applicable for all the Indian citizens within the Indian territory, and it is applicable for all the Indian citizens' digital personal data outside the Indian territory. So both ways it is applicable. As I said, if my data is going to be processed out of India somewhere, then those companies, those entities are also bound by the provisions of this act. Similarly, if we as a chartered accountant are processing the data of the European Union citizen, we are also bound by the GDPR provision, and we have to additionally take the steps to protect the digital personal data. So it's a two-way kind of a mechanism that is applicable. Right. Then there would be certain questions, right? So what will happen if I'm sharing my mobile number to my friends, to my relatives? So what will happen to that? Of course, when I'm sharing the data to my relatives, to my friends, to any my known persons on an individual basis, not for any commercial services, for not any professional purposes, the provisions are not applicable. Now the question would be here. See, the interesting thing will happen. Now, as a chartered accountant, we are filing the return of our friend. Right? So whether the friend has shared the data in the individual capacity for the domestic purpose or for the professional capacity. So to the extent that data is getting shared within our office for the professional purposes, the applicability of that, because there is a very thin line there. Right? So we need to understand, even if we are now handling the return of our friend, even we are not getting any money for that, because we are doing this work for the relationship, but still it is a professional service. So we should be very cautious about what we are doing in the professional capacity and what we are doing in a personal capacity. The data which is made publicly available, so I am writing the blogs. There I'm publishing all the emails and the mobile numbers, contact me. I'm publishing articles in any of the journals. I'm publishing my mobile numbers and all this. So that is publicly available. Right. So in such cases, certain exemptions are there and the provisions of non-applicability of the data is there. Now, as a data fiduciary, the person, the entity which is collecting so much of the data, what is the responsibility? What they have to do? First thing, they have to minimize the data which they are acquiring. For example, now when we go to the bank will ask whether you have a motor car, 4-wheeler. Of course, one can ask the question that why the bank is asking a 4-wheeler. What is the requirement of such data in the banking environment? Right? Are they going to use that for any business purposes, professional purposes? For what they are asking? Right? Similarly, if we are going to ask certain data. Okay, if it is related for certain professional practice area, that's fine. Let us say now you are taking the details of a client. You are filing the return of a father. You are not filing the return of the children. And you are asking How many four-wheelers are there with your children? Unwanted thing. So the requirement of the personal data should be minimized. Please understand. The requirement of the data should be minimized. So minimization is the basic principle, fundamental thing which is coming out of the data. So restrict the number of fields actually you require. Do not gather so much of the data which is not required. So as a firm, as a practicing firm, I need to decide which are those minimum fields of a digital personal data which I require, and only I will take those. That does not mean that the law restricts that you could not collect the fields which are not at all, which are required for your professional. If required, I will collect. And I will map that, okay, that name I'm taking for what purposes, mobile number I'm taking for what purposes, right? So what purposes for which I'm taking the data, that should be clear, not only to us, but we need to inform them, because this is a right of now the client or the person who is sharing the data. It is their right now. They can ask you how you are going to use my data. Please tell me how you are going to use my data. So I should ready with the template. Okay, we are collecting the data. We are going to use this for these purposes, and all those should be the legal purposes. Of course, we are our chartered accountants. We are doing the legal services, so there is no question of illegal services. And whatever be the purposes, for those purposes, the consent should be obtained. And now the consent management as a business is coming up. So there will be some organization, there will be some companies which will provide this, because consent management, consent life cycle is again going to be a very complex situation, because all the records of the consent, the client has given the consent, client has withdrawn the consent, client has modified the consent. In the modification, they have requested so many things that they have changed the consent. Let us say there are three purposes for which originally they have given the consent. Now they wanted to restrict the consent only for the two purposes or one purposes. They wanted to delete the data, they wanted to erase the data, they wanted to correct the data. At every stage, the consent is going to happen. And the record of that would be the huge amount of data record. So the consent management is essential. Now, here is an opportunity also. Because providing the services as a consent management is an opportunity. Auditing of that consent management is another opportunity. And there are certain manner in which the consent should be obtained. I mean, written consent, free consent, right to modify the consent, all these things are there. And by sending the notices for the consent management, we should have the details like that in case of a breach of the data, if it is observed by any client, to whom they should contact. Of course, in our firm, it's very small firm. So that's the purposes for that, they have classified the data fiduciary into two classes. One could be the normal one and another could be the significant data fiduciary. So of course, the chartered accountant firms are not going to fall under the significant data fiduciary. So the extent of responsibility to somehow would be reduced, but still it is not going to be zero. For the significant data fiduciary, who could be that significant data fiduciary? So that the norms or the criteria are in front of you. So those are handling very voluminous quantity of the data, sensitive personal data like the hospitals, banks, insurance companies, right? Some of the companies in other sectors also, they may come into the NBFCs. So those could be the significant data fiduciaries. We as chartered accountant may not fall under the category of the significant data fiduciary, because the responsibility of the significant data fiduciary is incremental as compared to the non-significant significant data fiduciary. And hopefully, of course, the criteria are there, but the government will notify. It may be possible some of the larger firms, they may fall under the category. At right now, the picture is not very clear. Slowly, these things will get improved. And on the significant data fiduciary, of course, there are certain additional responsibilities. So they have to appoint the data protection officer. They have to appoint the data protection officer. That could be the opportunity for us. Of course, certain technical things, technical knowledge, technical experience, all those things could be possible. So somehow, we may be able to provide the services kind of an virtual DPO and all this. Already the banks have started. Various entities have started appointing this DPO. As I said, without the finalization, notification of the rules, the banks are proactively taking the steps, and that is resulting into some of the hurdles, I cannot say the hurdles, but the new ways by which we have to conduct some of our procedures. Additionally, the significant data breach, again, there is one more opportunity. Of course, with the technical skills and competence, I'm not saying that every chartered accountant may provide these kind of services. It may require certain skills and competence. And our ICI is bringing some certification course to upgrade ourselves with that skills and competence. One more important obligation responsibility of this significant data fiduciary is they need to annually conduct the data audit. Right? So, data audit is mandatory under the provisions of this law. Of course, what is going to be the data audit? Data audit is about the assurance, about the compliances of all these provisions by that significant data commission. So, by upgrading with some certification, skills and competence, we may get that opportunity also. Right? Of course, digital technology related things or other things we may require to acquire it. Right? Important factor or the this which I would like to give upon that this act defines the rights of the data principle, and that is there in every country's data protection act. So which are those access? So access are right to correct. Many of the times we see that there are a lot of spelling mistakes in our name. There are a lot of spelling mistakes in the address fields. And after so many times of our request, they are not getting corrected. Particularly where the R, I, and E gets interchanged. So now this act has given the right to the data principal to correct all these mistakes. So right to correct, right to complete. Sometimes they just put some of the words of our addresses, not the full addresses. Whenever we change the addresses, now they have given the right to update. And one more important right there, which has been given, right to erase. So once the relationship as a client will end with any entity, that client may request to that entity, now erase my data. So it may be possible that now you are providing the income tax related, accounting related, GST related services to your client. And now client is going to be discontinued. They will avail the practices of some other chartered accountants. In that case, they may request to us to erase the personal data. Of course, that erase will happen subject to provisions of other laws. So if the Income Tax Act, GST Act, PMLA Act, Banking Regulation Act, or Bankers Books Evidence Act, if those acts requires the maintenance of the data for a certain period of time, then subject to compliance of that data, we may erase the data. So it may be possible that the client will request us to erase the data, but we cannot suddenly erase the data. We'll have to inform that, okay, we'll erase the data, but the Income Tax Act provides that we should maintain this data for so minimum number of years, so and so forth. And after that, we'll have to. But till that time, so let us say I have received the request today to erase the data. And I am informing them, no, I will have to maintain that data, let's assume for the next 5 years. And after 5 years, I will erase that. That is because of the provisions of certain authorities. Accept. But in that case, it is my responsibility to keep that data separately from other data so that it will be accessible with restricted access as and when required. Alright. So these are some of the important things because of the provisions which are there under this law. They are coming into the in our work procedure, in our practices, and we need to change the way by which we are providing the services. It is going to impact a lot. Because right now, it is not established that when the bank is providing the personal data to auditor, right? In my view, that is a kind of a process. So there we are acting as a processor. But even in that case, the consent is required. So let's say we are putting the data in the cloud environment. We need to obtain the consent from the client saying that, yes, we are going to use this data for accounting purposes. We are going to use this data for the taxation purposes.
Sir, sorry to interrupt you. We are going to conclude in next 5 to 7 minutes. So you are requested to please take the session accordingly. Thank you, sir.
So we need to understand that whenever you are going to use this kind of a shared services, for that things also we need to take the acceptance, consent from that particular data, from that particular client. Of course, there are certain exemptions, and as Mohitji has already triggered a warning message to you, I will have to wrap up the things, and I am now going to discuss all other provisions. Of course, there are certain impacts, as I said, on the various service areas which are related to the audit, and that's what we are witnessing. Accounting services, taxation services, or as an advisory services on which the impact would be the larger. And for that purposes, what the steps which are expected to be taken by the practicing chartered accountant. So we should have the clear-cut digital personal data processing policy, the consent management procedure, the notice management procedures, the security related mechanism, technical, otherwise also sharing of data related technical pressures. So all these things, as a chartered accountant, we are also required to be considered. Of course, we may not fall under the category of the significant data fiduciary. So there may not be requirement for us as a practicing chartered accountant to appoint a DPO, or we may not under the category of where we require to conduct the data audit. But in case of any data breach, any complaint, it may be possible that the data protection board, they may require the conduct the audit for a particular firm. So all these things we have to consider for these compliances. Of course, there are a lot of opportunities, there are responsibilities, as well as there are a lot of opportunities under this act for the compliance perspective and for the providing the services to our clients for the compliances on their behalf, the provisions of this act. So Mohitji, I hope with the instruction of you, I have stopped myself. Okay, fine. If there are questions, I will take it. Mohitji, are you there?
Ji sir, ji sir.
I have stopped.
Sir, actually, I haven't received any questions
Yeah.
from the participants. Just give me 1 minute only, sir.
Yeah, sure.
Sir, one, two questions are there. Sir, there's a one question. Can we sue the persons who commit breach of our personal data like matrimonial websites?
No, if you have given the data with the consent, right? On any of the site which are like matrimonial sites, they are using the lot of personal data, and those may be given as shared by any person with the consent. Without the consent, if they are processing the data, of course, right now there is no provision directly to take any legal action, but you have to lodge a complaint with the Data Protection Board. But all these things are yet to be notified, so we have to wait for the final rules.
Okay, so fine, sir. With these good learnings and on this insightful thoughts that have been shared by our two eminent faculties, CA Pankaj Shah ji and CA Uday Kulkarni ji, for this evening, I would like to thanks to all the participants. In more than 300 participants have joined this webinar on this emerging role. I would like to also thankful to our chairman, CA Satish Kumar Gupta ji and CA Vishnu Kumar Agarwal ji, the vice chairman of CPE committee of ICI. I would like to thank to the technical committee, technical persons, those who are supporting for this webinar, the committee members, committee resource persons, and to the whole the CA fraternity for watching this webinar. Stay tuned with ICI. I request again to please go and get registered for the WOFO 2.0 going to be conducted in the month of January 30th to 1st of February at Greater Noida. Thank you so much. गुड इवनिंग टू ऑल ऑफ यू। थैंक्स। ऐसे ही आप आईसीआई के साथ बने रहिए, वेबिनार्स को ज्वाइन करते रहिए और अपनी नॉलेज को बढ़ाते रहिए। मैं आपको बताना चाहूंगा आपका 2 CPRs आपके अकाउंट में, आपके पोर्टल पे जल्दी आपके क्रेडिट हो जाएगा, जिसने अपनी डिटेल्स डाली है और अपना वेबिनार अटेंड किया है। थैंक यू सो मच टू ऑल द पार्टिसिपेंट्स। थैंक यू।